In this session, I'm going to discuss about the ledger in Oracle Fusion. So we will discuss about the types of ledger and how to configure in Oracle Fusion. So before starting the setup, I will just tell you the basics of the ledger and types of the ledger in Oracle Fusion, all the basics like which will help you to understand the ledger concept in Oracle Fusion. First, we will discuss about what is ledger. In Oracle Fusion, ledger is a key component of the general ledger that serves as the foundation for your financial reporting and transaction processing. Ledger determines the currency, chart of accounts, accounting calendar, and accounting method. Each ledger represents a specific combination of these components and allows organization to track financial data according to their business needs, such as handling multiple currencies, fiscal calendar, or reporting structure. Each accounting setup requires a primary ledger and optionally one or more secondary ledger and reporting currency. The number of ledgers and subledgers is unlimited and determined by your business structure and reporting requirement. So basically, if you have noticed on the point 4 and 5th, which says the primary ledger is required. So whenever we define the ledger, the primary ledger is a mandatory ledger and others like secondary and reporting, these are the optional. It's varies on based on the business need. So basically this is the ledger concept. Types of ledger. In Oracle, we have primary ledger, secondary ledger, and the reporting ledger. Each ledger having the specific use and business cases here in Oracle Fusion. So now we will discuss about the primary ledger because the primary ledger is a mandatory and the secondary and reporting I will discuss in the other session. So primary ledger is the mandatory ledger which you have to set up in the GL, but secondary and reporting are the optional. It's not required, but if the business need, then you have to configure secondary and reporting. Now we'll discuss about the primary ledger. So primary ledger in Oracle Fusion is the main ledger that records all of an organization financial transaction according to the organization legal, regulatory and management reporting requirements. It is a foundation for financial accounting and reporting, and it is used to manage the day-to-day financial operations. Next, key component of primary ledger. There are four types of the key component of primary ledger. So when we set up a primary ledger, so these components is required to define in the primary ledger. The first, chart of account, the structure that defines how financial information is captured, categorized, and reported. Accounting calendar, the fiscal periods in which the transactions are recorded, such as monthly, quarterly, and annual period. Currency, the default currency in which the transactions are denominated, typically the functional or local currency of the business. Subledger accounting method specify how transactions from subledgers such as account payable, account receivable. The subledger is called the AP, AR, and fixed asset purchasing. These are called the subledger, are transferred into the ledger. The primary ledger is where all official and statutory financial reporting is managed. It serves as the authoritative source of financial data. If there are additional reporting or operational needs, secondary ledger and reporting currencies can be configured to provide alternative views of the financial data. But the primary ledger remains the central reference for the organization's financial results. Now talk about the primary ledger key function. It captures all business transactions and balances. It ensures compliance with accounting standards. It is used for consolidated financial reporting for management and statutory purposes. Now we will start defining the primary ledger in Oracle Fusion. So we'll log into Oracle Fusion. The navigation is go to setup and maintenance. In setup maintenance, just make sure in offering you have the setup financials and then click on the general ledger. In general ledger, you have to click on the manage primary ledger. We can see there are number of ledgers already created. We will create our new ledger. It's a test environment, so that's why there are lots of ledgers are created. We will give the our ledger name ABC ledger, and as I talked that the four component of the ledger. First is chart of account. So my chart of account is ABC COA, accounting calendar ABC calendar, and currency. This is for my US company, so it will be the USD. And accounting method, this will be the standard accrual. And save and close. Now next is we have defined the primary ledger. Now we have linked our component to the primary ledger. So after defining the primary ledger, we have ledger options. So let's define the ledger options. In the ledger options, click on the specify ledger options. Here you can see also there are others specify ledger options, but it's below the manage secondary ledger, which means this one will work only for the manage secondary ledger. So we have to select specify ledger options below the managed primary ledger. So here we have managed primary ledger or specify ledger option. So we have to define our option. In that case, we have to select our primary ledger because we have already created. Now we are going to select our ledger, apply and go to task, search your ledger. This is our ledger and save and close. So once you save and close, the new window will be pop up where you have to enter the some required details. Now you can see we have already provided these details on the primary ledger screen. So these four component, the chart of account, calendar, and currency, and accounting method is already selected. Okay. Now you will see, now I will tell you the meaning of each field, what is the use in our daily basis, or what is the use uh, in the Oracle Fusion. So what is the meaning of first open period and why default system takes January 22? The first open period, which means we have started calendar from the January 22. Okay, so that's why system takes automatically the first period of our calendar. And even that, if you have defined the calendar for 2 and 3 years, say example 22 and 23, right? Even that the system will take the first month, like first period from the calendar. So if you give here, even that you can also override this value and you can select based on your need which period you want to open. The first thing I would like to advise here, the first open period, suppose you are going to implement or roll out and you have defined your ledger and say example your go live is starting from the April 22. Okay, so you have defined the period from January 22, right? But the advisable is safe side to to have the period last 2 years. At least define the period for the last 2 years. Why? Because normally sometimes what happen, the consultant, they are not able to explain to business for the historical balances, that how you will upload your historical balances, because business they provide just the uh, trial balance of the last period which they have closed the book in the legacy system, and that will be uploaded in the current month. Okay, example that in December 21 they have closed the legacy system, so they took the trial from the legacy system, and that will be uploaded in the Oracle Fusion in January 22 as a opening balance. So in that case, what happened? The later sometime the business they come back like we need to upload the historical balance as well, as we have the statutory requirement or audit requirement that at least for 2 years we need to upload the historical balance. Historical balance means they want to upload the trial for the past period, last 2 years. Okay, so in that case, if you have not defined the last 2 years period in the calendar, in that case, you won't be able to upload the historical balances. So this is I see in the many cases in many organizations, the sometime after the during the go live, they also come up with the like we want to upload the historical balance. So just keep in mind that you have to open last 2 years, at least last 2 years, because it's not going any harm, right? Even you have defined last 2 years here in the first open period. Say example in the calendar, you have defined January, uh, starting from January 20, and the go live is in Jan 22. So still you can open the first open period as a Jan 20, and then you can close last 2 years. It's not going any harm, right? So next is number of future enterable period. So the future enterable period is normally we give as a one. And what is the use of the future enterable period? Why we give the only for one? Because we cannot give for the next, like okay, couple of the period. We just give for the next period. And why we give? Because sometimes what happen during the closing, GL closing is always done like always the subledger closing. So once the subledger is closed, and then after that, that 3 and 4 days later, the GL is closed after all the reconciliations and all the trial reporting is sent to the management, and then after that, the period is closed. In that case, the business they don't open the next period until the closing is done. So subledger is closed, APAR, say example, you are now in the February 22, and the closing is done for the January 22 for AP and AR. In that case, what will happen? Once the closing is done, then user they will start the booking the transactions and all these activity payment. Uh, so they will start, and they will start booking in the February 22, right? So what happened when you booked in the February 22, system will allow you to book, and to even you can also transfer the entries from subledger to subledger to GL, and even that you can also book the journal as well in the February 22, but you cannot make the posting until the period is open. So this is the concept of the number of future rentable period. And then we have retained earning account. So we will select the retained earning account, select the company, 1, department 00, select the retained earning and click on OK. So we have selected retained earning account. So basically the retained earning account is used for your expense and the revenue. So which is not carry forward to the next financial year, and is these balances are moved to the retained earning account. Okay, so that's why we use the retained earning account. I go here and tell you to specify the account to which retained earnings are posted during the closing of fiscal period helps manage profit and loss balances for the fiscal year. So our expense and revenue is moved to the retained earning account, and based on the retained earning account we generate the P&L, profit and loss. Now next is cumulative translation adjustment account. So in short, we say CTA, cumulative translation adjustment account. So this is used for the tracking foreign currency exchange rate difference when consolidating financial statement in the multiple currency, ensures proper reporting of exchange rate fluctuations. So we are not using this one. Then we have the default period and rate type. So default period and rate type in Oracle Fusion, it's referred to the exchange rate type used to convert foreign currency transaction into the ledger functional currency at the end of the financial period. This rate is crucial for accounting purpose such as revaluation, translation, and financial reporting, especially in organizations that deal with multiple currency. So whatever we select the rate type, okay, so that rate type will be used at the end of the period end when we run the revaluation and translation. So this is basically used for the revalute your foreign currency transactions balances into your functional currency. So in the different currency you can uh, revaluate the revaluation or the translation. So I will select here corporate. And there are like four types of rate type: the corporate, spot, user, and average rate. So these are the four rate. Spot rate, the rate at which a currency can be exchanged on the spot date, typically used for the real-time transaction. And corporate rate, a standard rate set by the organization for all transactions to simplify currency management. Period end rate, the rate used for translating financial statement at the end of an accounting period, typically for month-end or year-end financial reporting. Average rate, the average exchange rate over a specific period, often used for income statement translations. So these are the four rate type we use. So normally I use the corporate rate. So by default, Oracle Fusion uses a period and rate type for revaluations and translations at the close of a financial period, although this can be customized based on the organization requirement. So I will select here the corporate and default period average rate type. So basically this is used for the income statement. So default period average rate type refer to the exchange rate type used to convert foreign currency transaction using an average rate over a specific period such as a month or quarter. This type is commonly used for income statement accounts where using a single daily or period and rate may not reflect the average activity over the entire period. The period average rate type is typically applied in the following scenario. So these are the two scenarios where the period average type is applied. Income statement translations for companies that need to translate revenue, expense, and other accounts into a functional currency. The period average rate ensure that the translation reflects the overall economic activity. And same for the revaluations. If a company revalues its foreign currency balances, it may use the period average rate to apply an average exchange rate for revaluation purpose. So we use the corporate here. So normally in such type of scenario, we use the corporate because we cannot use the spot, right? So corporate rate is like we define in advance, okay, in the corporate rate just for a month. So based on the like whenever we are okay running the revaluation, so based on the like the period and it takes the rate from the corporate. So now next is track revaluation gain or loss by multiple segments. So this is basically used for in Oracle Fusion you can track revaluation gain or loss by multiple segment such as cost center, department, division or project within the chart of account. This feature is useful for organizations that need to assess foreign currency fluctuations not only at the overall account level but also by specific business segments. By tracking revaluation gains and losses by multiple segment, organizations can improve financial transparency and compliance with reporting standards like IFRS or GAAP, which may require detailed reporting of foreign currency adjustments across various business units or segments. So, prevent general ledger. So we are not checking this checkbox. Okay, tracked evaluation. It's based on your requirement, business requirement. If they want to track based on the multiple segment, then you can check this checkbox. Otherwise, you can track wide for the account. Prevent general ledger period closure when open sub ledger period exists. Okay, so this checkbox when you are closing a general ledger period, okay, if this checkbox is checked, first this checkbox is will validate is there any period is open for the subledger subledger which means AP, AR, FA. So if any subledger period is open, then system won't allow you to close the general ledger period for that specific period which the subledger period is open. If you check this checkbox, if you don't check this checkbox, then you can close separately the GL. If you check, then it will be depend on the subledger period. Now next is net closing balance general. So net closing balance general is used during the period end closing process to adjust or transfer the remaining balances of income and expense account to the retained earning account. This is typically done at the end of a fiscal period or year to close out the balances of temporary account, revenue and expenses, and reflect the company's net profit or loss in the equity section of the balance sheet. So, and next, journal processing, the balancing, enable suspense. So, when you have the unbalanced entries for the journal or even in the subledger AP or AR. So in that case, if you enable suspense just only for the journal and give the default suspense account, so when any unbalanced entries, system will park the difference of that unbalance in the suspense account. Say example, you have made the entries just for the journal, the expense is debit with the $100 and you have made the bank account credit with $99, which means it should be also the 100, the credit line, but it's not. In that case, the system will take the suspense account which is $1 and it will park in the general, means it will create one more line for the suspense with the suspense account in the general and make it the debit and credit with the 100. So same for the subledger accounting. Even in the AP and AR, if you have some entries, those are unbalanced. So in that case, that will also park in the suspense account. So normally we don't use, it's depend on the business requirement, but normally suspense is not used. Okay, that unbalanced entries should be corrected manually. And the next is the rounding account. So rounding accounts difference that arise when performing currency conversions or consolidation. So which means this rounding account, so I'm not giving this one, and enter currency balance account. It is a specialized account used to manage and reconcile currency difference in your financial transactions. Balancing threshold percentage. This is a setting used to manage the tolerance level for balancing discrepancies in accounting entries. This setting is crucial for ensuring that the system handles minor differences in account balances gracefully without requiring manual intervention. So if you give the threshold percentage here and based on that, is there any difference in the accounting entry, system will handle with the based on the threshold limit. And same for the balancing threshold amount. In that case also, we will give the amount here. Okay, it will not use the percentage. For the percentage, the balancing threshold percentage will be used, but for the balancing threshold amount, we have to give the amount. So it will check that amount. If any discrepancy find out by the system, then in that case it will use that threshold amount. Now next checkbox is enable general and manual subledger entry approval. So if you check this checkbox, then general approval is required, the approval process. So when you create a journal or manual subledger entries, those are required the approval. Then notify when prior period journal is entered. So if you enter the journal with the prior period, then system will notify that you are entering the journal with the prior period date. Then we have allow mixed statistical and monetary journal. So in this case, if you check this checkbox in the single journal, you can use that for the statistical, monetary journal, and for non-monetary journal. The next is validate reference date. So validating the reference date in Oracle Fusion application is crucial for ensuring that transactions are recorded with accurate and relevant date information. The reference date typically signifies when a transaction occurred or when it is valid for accounting purposes. Accurate reference date validation helps in maintaining precise financial records and ensures compliance with accounting standards. Example: suppose you want to ensure that all journal entries have a reference date that falls within the current fiscal period. You would configure the validation rules to check that the reference date of any journal entry is not outside the defined fiscal period. When a user tries to enter a journal with a reference date outside this period, the system will flag the entry and prevent it from being posted until the date is corrected. The next is limit a journal to a single currency, which means you can create a journal only for the single currency. In that case, you have to maintain the setting on the source level also. You have to check the some checkbox at the journal source level to make a journal to a single currency. And then next is enable reconciliation. So in Oracle Fusion application involves settings up in configuring the reconciliation process to ensure that financial records and accounts are accurately matched and verified. Reconciliation helps in identifying discrepancy, ensuring data integrity, and maintaining accurate financial statement. Example: suppose you need to reconcile bank statements with your general ledger accounts on a monthly basis. You would set up a reconciliation definition for bank accounts, define the rules for matching bank transactions with ledger entries, and activate the reconciliation process. You might also create a template that outlines the steps for performing the reconciliation and configure workflows to review and approve the reconciliation. By enabling the configuring reconciliation in Oracle Fusion application, you ensure that your financial data is accurately matched and verified, supporting better financial management and reporting. And then we have the general reversal criteria. So this general reversal criteria is setting up the general reversal criteria allow you to automate the process of reversing journal entries based on specific criteria. This can be particularly useful for managing periodic adjustment, correcting errors, or handling recurring transactions. Example: suppose your organization needs to automatically reverse accrual journals at the end of each fiscal period. You would configure journal reversal criteria to specify that all accrual entries with a certain account type and period should be reversed. You set the criteria to apply automatic reversal on the last day of each fiscal period and configure approval workflow if needed. By setting up general reversal criteria in Oracle Fusion applications, you ensure that your journal entries are accurately reversed according to predefined rules, improving efficiency and accuracy in financial management. So in that case, you have to select the general reversal criteria. You have to define first the general reversal criteria that will be appear here. So you have to select that reversal criteria, and then you have to check this checkbox if you want to auto reverse after open the period. As soon as the period is open, then the auto reversal will be performed. And this checkbox is for synchronized reversal between primary and secondary ledger. So if you have the secondary ledger as well and you want to reverse that that through the auto reversal in the primary and secondary ledger, in that case you have to check this checkbox. And we have import process, separate journal by accounting date during journal import. You know, every month from the other system or some legacy system, we are receiving the data, general data in Oracle Fusion. In that case, we are receiving the different accounting date. Okay. In that case, if you want to have the separate journal why accounting date during general import, so you have to make this checkbox. So say example, if you have received the 100 lines, okay, and they are like 10 different accounting date for the 100 lines, okay, which are debit and credit are equal, then in that case the system will create the 10 generals which having the debit and credit are balanced. Of course in the file it will be the balance as per the date. Okay, it's never happened that one line you are receiving of the first of the Jan and second line you are receiving from the second Jan. It's never happened in that case. As per the accounting date wise the general will be unbalanced, right? So in that case, you can check this checkbox. So next is enable intercompany accounting. Enable intercompany accounting allows organization to manage and record transactions between different entities or subsidiaries within the same organization. Intercompany accounting helps ensure that transactions are accurately reflected in the financial statement of each involved entity, and it supports reconciliation and compliance across the organization. Example, suppose your organization has multiple subsidiaries that frequently engage in transactions with each other, such as transferring inventory or providing services. By enabling intercompany accounting, you configure Oracle Fusion application to record these transactions in both the selling and purchasing entities. You set up intercompany accounts to track receivable and payable, define transaction rules to ensure consistency, and establish reporting options to consolidate and reconcile intercompany balances. By enabling the configuring intercompany accounting in Oracle Fusion applications, you ensure accurate and efficient management of transactions between different entities within your organization, supporting better financial control and reporting. Now, next is enable average balance. So, what is the use of this checkbox? Enable average balances. So, allow you to track and report on the average balances of accounts over a specified period. This is useful for financial analysis, performance measurement, and reporting, as it provides a more accurate picture of account activity and balances over time. Suppose your company want to track and report on the average balance of cash account on a monthly basis. You would configure the system to calculate the average balance of these accounts by specifying the calculation method, the period, monthly, and setting up the reporting parameters to include these average balances in financial reports. After enabling this feature, you would test the setup by entering transaction and verifying that the average balances are calculated correctly and reflected in the reports. By enabling the and configuring average balances in Oracle Fusion application, you can gain valuable insights into account activity and financial performance, helping you make more informed business decisions and improve financial management. And then we have accounting and document sequencing. So account accounting sequencing involves setting up rules and sequences for how accounting entries are numbered and organized. This is crucial for ensuring that journal entries, invoices, and other financial documents follow a systematic and sequential order. Document sequencing refers to the numbering and tracking of documents such as invoices, purchase order, and receipt. Paper document sequencing helps in managing and auditing documents effectively. Example, suppose your organization needs to implement a new sequence for journal entries starting at 1000 and incrementing by 1. Define a sequence named journal entry sequence with a starting number of 1000 and an increment of 1. Assign this sequence to the journal entry document type. Validate the setup by creating test journal entries and ensuring they are numbered sequentially. By effectively configuring and managing accounting and document sequencing in Oracle Fusion applications, you ensure that financial records and documents are accurately tracked, recorded, and maintained, supporting better financial management and compliance. So this one, if you check this one on the laser level, then balanced document sequencing will be enabled for the payable and receivable. So you can generate the document sequencing for the payables and receivable. And if you click on the legal entity, then it will be also enabled for the enforce chronological order on document accounting date. So it's like depend on the requirement. So which one for now I'm just having the no sequencing. So this is the detailed explanation of the each field, how the each field it works and what's the meaning. So what are the mandatory field? You have to give the values, you have to provide the inputs for that one, and others are the optional. It's depend based on your business requirement. So if your business requirement need that I need the general approval. In that case, you will enable this checkbox and do the some setting for the general approval, then it will work. And if you want to have the suspense entries, to want to have enable suspense entries for the unbalanced journals, in that case, you can use this one. So we have Oracle is provide the different options to the business. So based on the business need and business requirement, you can use those features and functionalities. Now we have given all the required information here, and for these there are some topics are the separate which will be in the separate session in the next. So because it's not like that I will just enable this checkbox and it will start going working. No, there are some settings which need to also configure. So these are the separate setting. Then that functionality will work. If I talk about the general reversal criteria set, intercompany accounting, enable reconciliation, general approval, notify when prior. So all these are the like the functionality. So based on the settings I need to configure, then it will work. So this is the separate topic. Now we have completed our laser setup, and we can just save to just make sure there is no error, and then we can it's saved, there is no error, and we can save and close. So this is how you can create the ledger, primary ledger, and its options.